Taking stock of COVID-19 labor policy responses in developing countries. Key messages. This brief is based on the analysis of over 1,300 COVID-19 social protection and jobs policies, spanning 55 countries that represent 80% of the population in low and middle income countries. Findings show that labor policies have played a key role in efforts to mitigate COVID-19's economic effects in developing countries, comprising 55% of all crisis-related social protection and jobs policies. To stabilize the demand for labor, 91% of countries have provided liquidity support to registered firms and 71% have adjusted their labor regulations to the crisis. To avoid mass layoffs or help job seekers, 35% of countries have adopted wage subsidies, 33% have resorted to providing unemployment benefits, and 29% have reduced or postponed income taxes. Governments are increasingly targeting self-employed or informal wage workers directly with cash transfers amounting to on average $714 million United States dollars, compared to $304 million United States dollars for non-labor related cash transfers. Around 15% of countries have adapted public works programs to help those most in need of income protection. As additional interventions are collected, future analysis will explore how policies affect different income and regional country groups, and how the labor policy response relates to labor market impacts. Introduction. The COVID-19 pandemic has triggered one of the largest economic downturns since the Great Depression. Beyond its devastating effect on health, morbidity, and mortality, the pandemic shook economies and labor markets around the globe, leaving no firm, worker, and household untouched. Governments responded to the crisis with a series of public health and containment measures that deeply affected societies and economies, including the supply and demand for goods, capital, and labor. These were accompanied by a series of social, financial, and macroeconomic policies aimed at mitigating the economic effects of the crisis. In low, LICs, and middle-income, MICs, countries alone, over 1,300 labor market and social protection interventions have been introduced since the start of the pandemic. 1. These policies often included a mix of social assistance, social insurance, and labor market interventions, with 98% of countries in the sample announcing at least one labor market policy or one social assistance policy, and 60% announcing at least one social insurance policy. Labor market policies were a key component of the response in low and middle income countries, comprising 55% of all crisis-related policies. 2. These measures targeted workers and firms, as well as the regulatory framework of the labor market. Of the labor market policies announced, 54% increased firm liquidity through tax relief, credit and payment facilities, utility support, and deferral of Social Security contributions, to help businesses of all sizes to survive and keep their workers. To stabilize the demand for workers and maintain business operations, developing countries prioritized liquidity support to firms and implemented regulatory adjustments. Among the most common firm liquidity policy types were tax relief, credit guarantees, and loan payment facilities. According to the limited available data on expenditures, these credit guarantees alone have an average budget of $1.2 billion United States dollars. 3. In terms of labor regulation, governments have supported additional job flexibility by allowing teleworking, job rotations, shorter working hours, or other flexible work arrangements. They have also made changes to remuneration policies, among others. Measures to support entrepreneurs and new businesses were the third most common measure, after liquidity support and labor regulation adjustments. To protect jobs and support the income of both workers and the unemployed, governments have targeted workers directly. Governments have prioritized labor supply policies such as wage subsidies, unemployment benefits, reduction of income taxes, and public works. On average, governments allocated budgets of US $686 million to these policies. 4. Additionally, governments also used labor-related cash transfers to support labor income, with an average budget of US $714 million. 5. Training and placement assistance was also provided by 31% of countries. This JobsWatch brief provides an analysis of labor market and social protection responses to the COVID-19 crisis, with a focus on policies targeted to workers and firms. It includes a comprehensive set of labor market interventions, using data from the Global COVID-19 SPJ Policy Inventory. 6. The analysis can inform governments of approaches that can be taken when introducing or adapting their crisis mitigation measures. To our knowledge, this is the first summary of labor market policies adopted by developing countries in response to the COVID-19 crisis. The COVID-19 SPJ Policy Inventory. The analysis is based on newly collected data from the COVID-19 SPJ Policy Inventory. This inventory adds labor market demand-side policies to the already comprehensive social protection and jobs policies collected by Gentilini et al., 2020. 7. The COVID-19 SPJ Policy Inventory contains qualitative and quantitative information on labor markets and social protection policies introduced between January 2020 and January 2021 for 55 low- and middle-income countries. 8. The 55 countries included in the inventory represent 80% of the population of low- and middle-income countries, Annex A. By income group, these encompass 15 low-income countries, LICs, 23 lower-middle-income countries, LMICs, and 17 upper-middle-income countries, UMICs. High-income countries, HICs, will be included in upcoming versions of this analysis. By region, 5 countries are in East Asia and the Pacific, 13 in Latin America and the Caribbean, 8 in Middle East and North Africa, 4 in South Asia, 19 in Sub-Saharan Africa, and 6 in Europe and Central Asia. Moreover, 36 of the countries represented in the inventory are also included in the COVID-19 High-Frequency Phone Surveys, HFPS dashboard published by the World Bank. 9. Box 1. COVID-19 SPJ Policy Inventory Labor Market and Jobs Framework. The COVID-19 SPJ Policy Inventory includes both supply-side and demand-side labor market policies. On the labor market supply side, it includes policies that help workers maintain their income and jobs such as public works, income tax reduction, training and placement assistance, or unemployment benefits. On the labor market demand side, it covers policies that help businesses survive and retain workers, such as firm liquidity or entrepreneurship support. Furthermore, the inventory includes changes to the regulations of the employer-worker relationship during the pandemic. While these labor regulations affect both workers and firms, they are implemented through firms and hence captured as demand-side interventions for the purposes of this analysis. For a detailed description of each policy, see Annexes B, C, and D. How are governments responding? Labor market policies are the most prevalent type of social protection response. Developing country governments relied heavily on labor market policies to mitigate the economic impact of the pandemic. These policies have often responded to the need of supporting or maintaining labor and firm income. Of all the social protection and jobs policies in the sample, 55% are labor market policies, compared to 38% social assistance policies and 7% social insurance policies. In terms of countries implementing these policies, all but one country in the sample, 98% of countries, introduced at least one labor market policy, Figure 1a, with countries announcing an average of 13 labor market policies each. This pattern holds when looking at different income groups. For all 3 income level groups considered, the percentage of countries adopting at least one labor market policy is the highest, followed by the percentage of countries adopting social assistance and then social insurance policies, see below Figure 1b. The use of social insurance policies increases with countries' income level. Cash transfers programs targeting workers became more popular during the COVID-19 pandemic. Within social protection and jobs policies, cash transfer programs are considered as social assistance. However, the policy inventory differentiates between the typical cash transfers targeted to the household and those targeted directly at workers with a labor market policy objective. In fact, over 38% of cash transfer programs included in the sample as social assistance are directed to workers. When these programs are considered, the share of labor market programs increases from 55 to 60%. Cash transfers that target workers are mostly intended to help workers who are not protected by social insurance schemes, such as informal workers, the self-employed, agricultural workers, and other non-traditional wage workers. On average, each of these labor-related cash transfer programs benefit around 7.9 million workers and households. 10. Figure 1. Percentage of countries with at least one social protection and labor market policy. Figure 2. Percentage of countries with at least one labor market policy, by category. Note: graphs based on 55 countries. Percentages in Panel B are based on the total number of countries in each income group. 15 countries are low income, LICs, 23 are lower middle income, LMICs, and 17 are upper middle income, UMICs. Labor market policies primarily focus on providing firms with liquidity and increasing regulatory flexibility. Policies increasing firm liquidity and labor regulatory flexibility were the most widely used labor market policies. These policies were aimed at helping businesses survive. Annex C and D describe them. Together, they comprise 77% of all supply and demand-side labor market policies introduced. Moreover, at least 91% of them introduced some sort of firm liquidity support and 71% introduced changes in labor regulations, Figure 2. This result holds true when looking across income groups. It should be noted that both firm liquidity and labor regulation policies typically apply to formal firms and wage workers. Among policies to improve firm liquidity, most governments prioritized giving firms tax relief, followed by credit facilities and guarantees, loan payment facilities, reductions in Social Security contributions, and utility and rent support, Figure 3a. Around 76% of countries have introduced tax relief policies, such as the postponement of corporate tax payments, extension of VAT tax credits, additional deductions for tax credits, or the extension of the deadline for settling tax liabilities. Around 35% of countries allowed firms to postpone the payment of their part of Social Security contributions. These policies have likely been attractive because they are an easy way for governments to help businesses without having to make additional transactions or reallocating resources. Many governments also introduced more active policy options to inject firms with liquidity. Around 67% of countries created credit guarantee funds, allocating an average of US $1.2 billion. UMICs allocated the biggest budgets to these funds, with an average of Figure 3. Percentage of countries with at least one firm liquidity or labor regulation policy. A. Firm liquidity. B. Labor regulation. Note. Graphs based on 55 countries. Percentages in Panel A are based on the number of countries implementing firm liquidity policies. Percentages in Panel B are based on the number of countries implementing regulatory adjustment policies. 1.5 billion United States dollars. 11. LICs and LMICs also implemented this policy but with a smaller budget. Around half of the countries analyzed have also offered loan repayment facilities to support businesses' liquidity, by reducing the interest on their loans or allowing firms to restructure or postpone their debts. Other recurring measures included support for utilities such as water, natural gas, and electricity bills, or the suspension of rents. In terms of labor regulations, governments introduced a series of regulatory adjustments to protect workers, Figure 3b. They have permitted new working conditions and methods, such as teleworking and other flexible work arrangements not previously stipulated by law, with 45% of countries announcing this type of adjustment. Around 31% of countries have also modified labor regulations to increase requirements to health and workplace safety regulations. Dismissal procedures, severance payment compensation, hiring flexibility, and leave policies were frequently modified. However, there is considerable heterogeneity in these regulations as some policies prevented firms from dismissing workers while others allowed them to temporarily cancel their contracts. Similarly, in the case of remuneration, some policies allowed firms to decrease remuneration while others required increased allowances for certain type of workers. Support to entrepreneurs was also common. Around 36% of countries introduced policies that promote entrepreneurship by encouraging the unemployed and target groups to start their own business or to become self-employed. Some policies were targeted to already existing ventures by providing them with grants. Labor income support policies are less common but affect workers. Policies aimed at supporting labor income have been less widely used. Less than 40% of countries have implemented some type of policy directed to increase disposable income for workers and the unemployed, such as unemployment benefits, wage subsidies, income tax reduction, and public works. LICs tended to implement only one of these policies at a time, while LMICs and UMICs introduced on average two of these policies at a time. LICs have prioritized public works programs and income tax reductions. LMICs have been able to implement more unemployment benefit programs, which, in some cases, were accompanied by wage subsidies. UMICs, in turn, have prioritized wage subsidies, accompanied by either unemployment benefits or income tax reductions. On average, budgets allocated to labor-related cash transfers are roughly equal to the combined Value of all other labor market policies, including public works, unemployment benefits, and wage subsidies. However, the budget allocated to cash transfers for workers remained twice as large as the amount allocated to non-labor cash transfers, Figure 4. Governments have allocated on average $686 million United States dollars for increasing workers' income through traditional labor market policies, while the average budget for cash transfers directed to workers is $714 million United States dollars, compared to $304 million United States dollars for non-labor related cash transfers. 12. Moreover, average expenditure on labor-related cash transfers is higher than non-labor related cash transfers. This is especially true for LMICs and UMICs, while LICs follow the opposite pattern. This might be explained by LMICs and UMICs' increased ability to target specific types of workers. Figure 4. Average expenditure for labor-related cash transfers, CT, non-labor-related CT, and income support by income group, in millions of US dollar. Note: expenditures based on 117 programs, 17 are income support, 39 are labor-related CT, 61 are non-labor CT. Non-labor CT include unconditional cash transfer policies for households. Labor-related CT include unconditional cash transfer policies to formal workers, informal workers, independent workers, and farmers. And income support include unemployment benefits, wage subsidies, income tax reduction, and public works. Figure 5. Percentage of countries with at least one new policy or adaptation of an existing one, by labor market policy category. Note: graph based on number of countries implementing each category of labor market programs. Most countries have adopted a combination of new and adapted policies. The labor market policies adopted by governments are a combination of completely new initiatives and adaptations of existing policies, Figure 5. Around 60% of labor market policies adopted by governments are new, while the remainder are adaptations. Most programs related to training and placement assistance, entrepreneurship support, wage subsidies, and unemployment benefits were newly created in response to the economic downturn. For most of these policies, this is true irrespective of country's income level and may result from the lack of pre-existing active labor market policies in LICs, LMICs, and UMICs. In the case of unemployment benefits, while most policies are new, there is some regional variability. Policies were mostly new in LMICs and mostly adaptations in UMICs, probably because unemployment insurance, UI, schemes are scarcer in the former than in the latter. Almost all countries in the sample adapted pre-existing firm liquidity support programs. This is expected, as firm liquidity programs included deferrals of existing loan payments and postponements, grace periods for firms to meet their Social Security obligations. However, among firm liquidity programs, most governments that introduced access to credit guarantees developed these funds in direct response to the pandemic. Regarding income support policies, public works policies were also largely adaptations of existing programs. Labor market policies have remained the most widely used policy over time. Labor market policies have remained the most widely used over time. The percentage of countries adopting additional social protection policies has decreased for every 3-month period since the World Health Organization, WHO, declared the pandemic, Figure 6a. Yet, the percentage of countries adopting labor market policies remains the highest for each period. Despite the decline in new social protection and jobs policies, some governments continue to announce new labor market policies, Figure 6b. The number of new policies introduced since the crisis has declined, as many of the policies created at the beginning of the crisis are still active or have been extended. In addition, many new programs were introduced at the beginning of the pandemic as governments were trying to provide rapid assistance. The composition of labor policies has evolved over the past year, with policies such as training and placement assistance and entrepreneurship support gaining relative importance in the period from June to November 2020. This increase may reflect a shift of policy priorities to prepare and connect job seekers to labor market opportunities and address the early impacts of the crisis on unemployment. In contrast, interventions such as income tax reduction or deferrals, wage subsidies, and unemployment benefits were not implemented in the last 3 months, Figure 6b. Firm liquidity measures, however, have been used throughout the crisis. Figure 6. Percentage of countries with labor market and social protection policies by area and category. A. by social protection area. B. By labor market category. Note: Panel A is based on 55 countries. Panel B is based on number of countries implementing each category of labor market programs. What's next? Our next JobsWatch brief will explore more developing and developed countries as we expand the COVID-19 SPJ policy inventory. The extensions will not only provide evidence on more countries but also enable deeper analysis and answer the question whether the findings presented in this brief will hold globally. Subsequent analysis can help identify patterns in the policy responses across income or regional country groups and relate them to underlying labor market conditions. For example, more program data can shed light on the differences in the labor market policy responses across different types of countries. So far, only broad measures of policy type have been disaggregated by country's income level. Adding new countries to the inventory will enable more detailed comparisons by region and income group. Further work will shed light on the evolution and timing of the labor policies. Finally, a follow-up brief will provide initial insights on the relationship between the COVID-19 labor market mitigation policies and labor market impacts in developing countries. Annexes. Annex A. Countries included in the brief. Annex B. Description of labor market policies included in the brief. Annex C. Description of labor regulation policies. Annex D. Description of firm liquidity policies. References.